On the surface, making superannuation contributions seems like a fairly simple process. However, there are many rules that need to be taken into account to allocate these monies properly. Mark Ellem from Accurium is with me today to discuss this point further. Hi, Mark. Thanks for joining me.
G'day, Darren. Lovely to be with you today.
Look, let's start with the contribution acceptance rules. Can you just outline what this requirement is?
That's an excellent phrase you start with there, Darren, a contribution acceptance rules, because a lot of people ask the question, can I make a contribution to superannuation? Where really the correct question is, can the trustee of the super fund accept the contribution? So we've seen some changes with those contribution acceptance rules that happened in the last financial year. So when a person wants to make a contribution to the fund, they first have to ascertain whether the trustee of the fund can accept the contribution and look at the rules that apply for the relevant financial year.
Okay, so the rules have changed. Look, what sort of effect has this had?
Well, one thing that I continue to see, Darren, is that there's a misunderstanding between how the contribution acceptance rules work together with the contribution cap rules. And I think, again, if we come back to asking the question, can the fund accept the contribution rather than can I make it, then the contribution cap consequences of the trustee accepting the contribution will follow in that order. So once we determine that the trustee can accept the contribution, then we can look at what are the contribution cap consequences of the fact that the trustee has accepted that contribution. Because the mix-ups that I'm seeing is, oh, I can't make the contribution because my prior 30 June total super balance is above the general transfer balance cap. So I don't have a non-concessional cap, so I can't make the contribution. And they've already made the contribution and they think, well, we can get it back and we'll avoid having an excess non-concessional contribution amount, where it's, well, sorry, no, with the rule changes and particularly removing that work test from the contribution acceptance rules for those aged 67 up to 75 and 28 days after the end of the month they turn 75, they most likely could still have accepted the contribution, and now they have to look at the consequence of that contribution acceptance with respect to their own cap. Which cap applies? In this instance, non-concessional cap. What is it? It's zero, because their prior 30 June total super balance is greater than general transfer balance cap, and therefore they're going to have an excess non-concessional contribution amount. So there's still that mix-up between the acceptance rules, which are in SIS, and the contribution cap consequences, which are in the Tax Act.
Okay, Mark, you just provided a great segue there, because you mentioned the work test, and that was the next point I was about to ask you about. Now, the work test obviously is different, and you just alluded to some of the changes very quickly in that previous answer that have been made, but it still actually does apply to some people. Can you tell me who it applies to right now?
Yes, so with the changes that have been made to the contribution acceptance rules, again, that sit in the SIS regulations. So that's all about the trustee being able to accept the contribution. That work test was removed for those aged 67 to 75, but it was sort of transported across into the Income Tax Act. So it still applies, but it applies for those persons who want to make a contribution, a personal contribution, and claim it as a tax deduction in their personal tax return. And at the time they make the contribution, they're in that age bracket of 67 up to 75. And again, when I say 75, including that 28 days after the end of the month in which they turn 75. So here we've got to be careful, because we've got the acceptance rules that say, okay, you're between 67 and 75, I can accept it. Thank you very much, it comes in. Now the individual says, well, I want to claim that personal contribution in my income tax return. I want to claim it as an income tax deduction. Because they're aged 67 to 75, they've got to satisfy the work test in that income year in which they've made the contribution, and they want to claim it as a tax deduction. And that work test hasn't changed from moving it across from the SIS regulations to the Tax Act. It's still that for gainfully employed for 40 hours in 30 consecutive day period. And also just remember there was the work test exemption rule for those that had a prior 30 June total super balance of less than $300,000. That was also moved across as well. So we're looking at we want to claim it as a tax deduction, that personal contribution. We're in that age bracket, 67 to 75. We've got to meet that work test in order to claim the deduction. Now, if we don't meet the work test and we can't claim it as a deduction, that means the contribution is still accepted by the fund. So it'll now count towards the non-concessional cap, which again is subject to prior 30 June total super balance. So we can see with the errors or misunderstandings that can come about by not getting all these rules correct.
Yeah. Now, you've noticed that there are definitely some mistakes being made in this area. What kind of errors are we talking about here?
Well, the ones that I just mentioned, where the plan would be, I'm going to make a personal contribution and claim it as a tax deduction. And if you're in that age bracket, 67 to 75, you've got to meet that work test. And then if you don't meet the work test, it's not a case of, oh, well, I didn't meet the work test, give me the contribution back, because the work test doesn't sit in the contribution acceptance rules anymore. So the trustees keep it. And therefore, rather than it being assessed against the member's concessional cap, and of course, the concessional cap is not determined by the member's prior 30 June total super balance, it's now going to be counted towards their non-concessional cap, which is determined by their prior 30 June total super balance. So if, for example, they're over the general transfer balance cap, their prior 30 June total super balance, they're going to have a non-concessional cap of 0, which means they'll have an excess. So that's one of the traps there. The second one, of course, if you're wanting to claim a tax deduction for a personal contribution and you in that age bracket, you meet the work test, or you're below 67, which means you don't have to meet the work test, you've then got to make sure you provide a valid notice of intention to the trustee to claim that deduction by the relevant due date, which is generally by the time or the earlier of you lodge your tax return or 30 June of the following income year. You've got to provide that notice of intent, and you've got to get back from the trustee that acknowledgement. And in your personal tax return, you've had for the last couple of years where you're putting in a deduction for a personal super contribution, you've had to tick the box saying, I've provided the notice of intent and I've received back an acknowledgement. And you'll know that your notice of intent is valid because you've received the acknowledgement from the trustee. Now, that can be a little bit more of a challenge for a self-managed super fund because they're the same people, right? So when that acknowledgement is coming back from the notice that's been provided, you've got to really check and make sure that it is a valid notice, that it has been provided within time, those 2 time periods I gave. A little additional spanner in the works can be if the person has started a pension during the year or rolled over benefits out of the fund during the year. That can affect the notice requirements and the amount of deduction that could be claimed for a personal contribution. So all those things have got to be lined up, dotting the I's and crossing the T's to make sure at the end of the day, if the individual comes out of the lucky dip barrel for a review by the ATO, their personal return, they can provide a copy of that notice.
Mark will be covering these points in a lot more detail at the Accurium Compliance Day 2023, which commences in Brisbane on the 23rd of August and concludes in Sydney's Parramatta district on the 30th of August. To find out more about the event and register for it, please reference the details you can see on your screen now. Look, thanks again, Mark, for your time, and I look forward to seeing you in Brisbane at the Compliance Day in a few weeks' time.
Thanks, Darren. So do I. Look forward to seeing everyone. We're going to have some fun.